Jill Mason, procurement manager for Acme Products, faces a dilemma. 3 suppliers with whom Acme has cost-plus contracts have approached Jill, indicating they have experienced events that were beyond their control and have impacted their ability to meet their contractual obligations. Hawk Auto Engineering lost 750,000 yen when a judge ruled against it in a patent infringement lawsuit. This was an unusual event. Canary Bottling Company suffered $97,000 in flood damage to its manufacturing plant. The plant is situated on the shores of a major river that floods every 7 to 10 years. Flooding is not unusual given the plant's geographic location. However, it is an infrequent event. The government in one of Parrot Pharmaceuticals' foreign markets outlawed the class of drugs that it had been manufacturing in-country for the last 6 years. This resulted in Parrot having to shut down operations in the country. Both unusual and infrequent, this extraordinary event required 1.1 million euro in site closure and remediation costs. The suppliers are requesting either price increases, schedule delays, or a change in the resourcing of products. Each supplier has shared its income statement with Jill. The income statements list the events in question as non-recurring items. Jill shared the information with her internal accounting department, which has confirmed the events are properly recorded on the income statements. Non-recurring items are unexpected, unplanned, or atypical events that have a material impact on a firm's earnings and do not occur as a part of normal operations. Recovering from flood damage, managing lost revenue due to a legal settlement, and having a sovereign government outlaw your product all have a material impact on earnings, but none of them are a part of day-to-day operations. An event is unusual if it is not a normal part of a firm's daily operations, but might be expected to occur at some point in the future. Settlements or losses incurred due to a lawsuit or strike are examples of unusual events. An event is infrequent if it doesn't occur often but cannot be considered unusual in your operating environment. If your manufacturing plant is on the shores of a river that is known to flood every 7 to 10 years, then flooding might be infrequent, but it is not unusual. An event is extraordinary if it is both unusual and infrequent. Having a sovereign government outlaw your product meets this standard. What's infrequent, unusual, or extraordinary for one firm might not be infrequent, unusual, or extraordinary for another firm. All these non-recurring items are disclosed on the income statement. Unusual and infrequent items are disclosed pre-tax and as part of continuing operations. Extraordinary items are disclosed net of tax after any disclosures for discontinued operations. Reporting non-recurring items enables the firm and its owners, investors, and analysts to back out any unexpected, unplanned, or atypical events that have a material impact on the firm's regular earnings. Should Acme Products be responsible for the additional costs due to Canary Bottling Company's lack of flood insurance, Hawk Auto Engineering's lack of proper patent protection, or Parrot Pharmaceuticals' inability to appropriately protect its products? While some events are unusual, infrequent, or extraordinary, all businesses must deal with risk. Jill should evaluate whether the acceptance of the business risk by one of its contractors obligates her to pay more, reschedule delayed deliveries, or accept new resourcing of its products. The longer a firm is in business, the more likely it will experience some type of unexpected, unplanned, or atypical event that will impact its earnings. Managing these non-recurring items and disclosing them on the income statement aids transparency and helps build trust between the firm's management, owners, customers, investors, and analysts.